Good afternoon. I'm opening this special meeting of the Finance Committee of the Dutch House of Representatives. We are here today because we welcome a very special guest, Gabriel Zucman. He's a renowned scientist and an expert on all items related to the taxation of the ultra-high net worth individuals. He is a professor of economics at l'École Normale Supérieure in Paris and also in Berkeley, where he teaches summer courses, is my understanding. He's accompanied by Quentin Parinello. He's working together with Gabriel Zucman on the policy side of the research that's been done. We have several members of parliament here present. Mr. Stultjens from the Green Labour Alliance, Mrs. Van Dijk from the Christian Democratic Party, Mr. Bushoff also from the Green Labour Alliance, Mr. Oosterhuis from the Democrats 66, and Mr. Hoogveen, I knew it, from the party Yes 21. No, that's not right.
Right answer.
It's the right answer, yeah. Although in Dutch it also means yes, so the right answer, 21. Difficult party name. Sometimes people think they are linked to the surnames of the two founders of the party, but that's a mistake as well. What we are going to do is give you the floor to give an introduction on your recent findings and maybe some recommendations you have for Dutch politics. And then I'll give the floor to the members of parliament to ask you questions. I give you the floor, and please use the microphone because the cameras are following the person that is speaking through the microphone. The floor is yours, Mr. Zucman.
Thank you so much, Mr. Chairman. Thank you, members of parliament, ladies and gentlemen, for being here today and having me. It's a great honor to be with you today. And I wanted to start the conversation by pointing that there is an anomaly in our tax systems, and that's very much the case in the Netherlands. The anomaly is that the super rich pay much less tax relative to their income than the rest of the population. This is something that has been established relatively recently, actually over the last 4 or 5 years, by various teams of researchers working often in partnership with tax administrations in different countries, including in the Netherlands, something that was not well known before because there's no official government statistics about the wealth of the super rich, the income that they earn, and the taxes that they pay. So there's a lot of opacity about this question, and this opacity has started to dissipate very recently. And what has appeared clearly is that everywhere the rich pay much less. In the Netherlands, the wealthiest individuals have a total tax rate of about 17% of their income, when the average Dutch person pays 45% of their income, all taxes included in both cases, income tax, but also VAT, other consumption taxes, payroll taxes, property taxes, everything. And that's due to the failure of the individual income tax to effectively tax the super rich. And the reason for that is that when you're extremely wealthy, it's relatively easy to structure your wealth such that your wealth will generate very little or sometimes no taxable income. So for instance, a couple of years ago, you had revelations by the US media, ProPublica, about the taxes paid by US billionaires. And you saw in some years, people like Jeff Bezos or Elon Musk reporting very little income, paying very little or sometimes no income tax. In 1 year, Jeff Bezos said, look, I'm so poor that I'm going to claim family benefits, and he received family benefits. And there's nothing illegal in that. That's the way the income tax works, right? If you find ways to report no income, as CEO of Amazon, he didn't pay himself a wage. Amazon didn't distribute dividends, he didn't sell shares, and so he didn't realize capital gains, then you don't have income tax to pay, right? So that's a structural limitation of the income tax, and what the recent studies have established is that the problem goes way beyond just a few isolated cases, but the problem is systematic, is in fact worse in the European Union than in the US, where the US has for almost a century now put a number of anti-abuse provisions in place which don't exist in Europe. And the consequence of that is that more than a century after its creation, the individual income tax remains an incomplete achievement. The ultra-wealthy have not yet entered the realm of income taxation. So why is that a problem? It's a problem for three reasons. The first reason is that the fact that the super rich pay much less than the rest of the population is a violation of the basic principle of equality before the law. Equality before the law in the realm of taxation means equality before the tax law, and the most conservative interpretation that you can make of that principle is that wealthier individuals shouldn't be allowed to pay less tax relative to their income than the rest of the population. But that's precisely the situation we are in. And that's a grave problem in and on itself. The fact that there are different rules for the super rich and for the rest of us, more lenient rules, that's not something that we can accept. This is something that strikes at the heart of what it means to live in a democracy, what the rule of law means. So that's number one. Number two is that the public finance implications of this anomaly are now significant. 40 years ago, when the super rich were not as wealthy as today, you could dismiss the problem from a public finance perspective. The fact that they didn't pay a lot of tax, didn't have major implications for the budget. But now it does have first-order implications because the wealth of the super rich has exploded over recent decades. In fact, it's been one of the most striking trends in the global economy of the last decades, with an acceleration over the last 15 years, the boom of billionaire wealth in particular. So just one number, at the global level, in 1987, billionaires owned the equivalent of 3% of world GDP in wealth. Today, they own about 15% of world GDP in wealth. So that's the second problem. Now, the third problem, and the biggest problem, is what all of this implies for democracy. Because the fact that the super rich essentially can avoid taxation has a snowballing effect on wealth concentration. For ordinary people, before they can save and accumulate wealth, they first have to pay taxes, right? You earn a wage or you earn some retirement income, first you pay your tax, then if any money remains, you can save, right? But for the super rich, they can essentially save 100% of their income without any tax to pay. Hence, the very fast pace of increase in their wealth. The wealth of the super rich has grown about 10% per year on average over the last 4 decades, as opposed to 3-4% for the average person. And so with this snowballing wealth accumulation at the very top, there's been an immense increase in the power of the very rich. And there is a fundamental tension in all democratic societies about extreme wealth on the one hand and the very possibility of democracy on the other hand. And we've known that for millennia, centuries. Aristotle already wrote about that a long time ago. We kind of forgot a little bit about that in Europe after World War II, when extreme wealth had disappeared. But now we see what happens in the US. We see what happens more broadly in many countries, the kind of speed at which oligarchic drift can materialize, and the threat that extreme wealth can pose for our democratic institutions. Hence, the proposal that I've been developing with my colleagues of the EU EU Tax Observatory, which is soon going to become the International Tax Observatory. The idea is very simple. The idea is we need to create a new principle, very simple, a principle that says that extreme wealth has to come with unavoidable duties towards society. You have to pay a minimum amount of tax each and every year if you're extremely wealthy. I have proposed to define extreme wealth as owning more than 100 million euros. We can debate this threshold, of course, but the principle itself is very important. There has to be a minimum. And then, if we agree on that, and I think almost everybody agrees with that, the question becomes, how should the minimum be computed? If the minimum tax is computed as a fraction of income, it doesn't work because it's very easy, like in the example of Jeff Bezos, to report very little income. So the minimum has to be computed as a fraction of wealth, which is much harder to manipulate. Hence the proposal for a minimum tax for the super rich equal to 2% of their wealth. A very modest proposal, 2%, is the tax rate that would ensure that the super rich would pay as much tax, not more, but as much in tax relative to their income than the rest of the population. So of course there's a debate to have, an important and complicated debate to have about the proper degree of tax progressivity, the extent to which the rich should pay more relative to their income than the rest of the population. But here it's not about that, it's about how to ensure that they don't pay less. And 2% is the rate that would ensure that they don't pay less than the rest of the population. And so this proposal was first developed in a report that I wrote for the G20 in 2024 when Brazil had the presidency of the G20. And then it has kind of caught fire. So the French National Assembly last year passed this minimum tax of 2% for people with more than 100 million euros in wealth. It was then blocked by the Senate, so it's not been enacted yet, but it has started a very important conversation in the French public. And this is an issue that's being examined in ministries of finance following the G20 summit and by parties and elected members of parliament in many countries, including in Belgium, in Spain, in Brazil, in the UK, pretty much all over the world. And we are seeing a number of initiatives that are bubbling up in 2026. Perhaps let me mention just one, that in November, it's likely that California will have a referendum, what is known as a ballot initiative in the Californian context, on a tax of 5% on the wealth of California's billionaires. It's been put on the ballot by Californian unions. It could well be the first billionaire tax ever enacted in the world, unless the Netherlands does it first. And what I want to emphasize is that, the problems are pretty much the same everywhere. The solution, again, it's not, rocket science, not very complicated. There are not 36 ways to fix that problem. If they pay very little, you want a floor, you want a minimum, and if you want the minimum to be effective, it has to be expressed as a fraction of wealth with no loopholes, right? That's really the important idea, is that if you're extremely wealthy, in contrast to past wealth taxes, or things like Box 3 in the Netherlands, you shouldn't offer any possibility to avoid the tax, right? So the principle is, if you have more than 100 million or 50 million, or let's debate, but it's clear that you have a very high ability to pay taxes, and so you don't need any special deduction whatsoever, so the law can be kept very simple. So thank you very much for your attention, and I very much look forward to your questions. Thanks a lot.
Thank you very much for your clear and well-structured introduction. I will now look to the members of parliament to ask questions. And I propose we start with one question per parliamentary group with the ability to ask a follow-up question. And I'll start with Mr. Stultins from the Green Labour Alliance.
Well, thank you so much for being here and also for your quick introduction, of course, for the book where you describe this plan as well. Whenever we propose something here, a tax proposal is always very tricky if it's legally valid and solid. That's always a tricky part because well, we have some traumas here in the Netherlands with laws that have been withdrawn because it was not legally possible. How did you deal with that in France? And do you have like any legal advice how to make sure this proposal actually legally solid and that we don't, well, in a couple of years regret making decisions that are not legally solid?
Please go ahead, Mr. Zucman.
Yeah, absolutely. So there is a long history and experience with wealth taxation in Europe. France used to have a wealth tax, Denmark, Sweden, Germany, Spain, Norway, Switzerland, the Netherlands to some extent with Box 3. And those wealth taxes didn't work well. In my view, in fact, they were really big intellectual and political failures. And many of those taxes end up being ruled unconstitutional, mostly because they had all sorts of exemptions and then created, because of that, like unfair treatments between similar categories of taxpayers who ended paying different amounts of taxes because of the loopholes in the law. And so a lot of our thinking has been, and that's how economists can be useful, has been about drawing lessons from the historical experience, drawing lessons from the past. What were the mistakes that were made, and how can we do better in the future? And that's from that kind of line of thought that this proposal was born. So the idea was to propose something really different, right? And that's why I don't call it a wealth tax. And it's not really a wealth tax. You have to see it as a kind of minimum income tax. But to compute this minimum, it has to be based on wealth for the reasons that I mentioned. And in contrast to the past wealth taxes, it would start much higher in the wealth distributions. That's really the key difference. But in exchange for this high exemption threshold, no deductions, no loopholes whatsoever. So that makes it much more solid from a legal perspective. And I think you can go beyond that and say that it's the current situation which is not acceptable and which is in fact a violation of our basic principles of equality before the law, and in many countries which is unconstitutional. In many countries you have principles that say, look, the tax system shouldn't be regressive. For instance, in France, the only thing that the Constitution says in France about taxation is, getting back to the Declaration of Human Rights of 1789, is saying there should be equality before the law, and the courts themselves, the Constitutional Court itself, has said that the most basic interpretation that you can make of that principle is that the rich shouldn't be able to pay less than the rest of the population. And so it's the status quo which is unconstitutional and that we need to fix. And we didn't know about how bad the current situation is before the studies that were conducted. Essentially, the first study was done in 2019, and then the study for the Netherlands was done in 2022. I mean, it's really recent that we have the data, quasi-official data in many cases, coming from collaborations with tax administrations that establish very clearly that we need to change. Something has to evolve. The current situation is just not acceptable.
A follow-up question? No? Okay. Then Mrs. van Dijk.
Thank you. You think the Netherlands would be able to play a lead role in this? Why? Why are we important for this transformation?
Mr. Zucman.
So in the Netherlands, there is a particularly good, comprehensive, clear, and striking study of the regressivity of the tax system of the Netherlands. A study that was conducted by researchers from CPB working in collaboration with academics in various institutions. And the findings are really spectacular. The finding is that the wealthiest people in the Netherlands pay 17% of their income in taxes, all included, including the corporate tax that they indirectly pay through the companies that they own, when the average person pays 45%. So that means very concretely, what does it mean? So that so an average Dutch person earns €1 in income, all included, about 45 cents are going to go to the government, either in payroll taxes, in VAT, in income tax. But for the super rich, out of any euro they earn, on average only 17 cents are going to go to the government. It is 17% is actually the lowest number, in the different studies that have been done, whether it's France, the US, Italy, Brazil, Sweden, Norway. So the situation looks particularly bad in the Netherlands. And out of that 17%, what you have to understand is that almost all of that comes from the corporate tax. If you look at the personal amount of tax paid by the super rich in the Netherlands, it's really close to zero. And that study, I think, now is pretty well known. And so it seems to me that the debate is quite mature in a country like the Netherlands. This type of studies are still missing in many countries. Like we'd like to have a study, for instance, for the UK, it would be really important, or Spain, and they still don't exist because it requires a ton of work to do it carefully, to link people to the businesses that they own, to have a comprehensive view of their income, of the taxes that they pay, all included. But that study exists in the Netherlands. The findings are very clear. And very concretely, if the Netherlands had this minimum tax of 2% as a fraction of wealth, what this would do is just that it would force the super rich to pay exactly as much as the average Dutch taxpayer. Not more, not less. And that seems to me to be an idea that is consensual. It was designed like that. The proposal was born out of the work that was done at the G20 in 2024, where the idea was to put on the table a proposal that would be viable in a forum like the G20. So where the different countries could, in the medium term, agree on something. It's not easy. The G20 played an important role in fostering an agreement on a minimum tax of 15% on multinational companies in 2021. Not a very high rate, but we were able to agree on that collectively. And so here the idea was, okay, let's try to replicate that success for the super rich, a proposal on which all countries and everybody within each country can agree on.
You would like to ask a follow-up question? No? Mr. Oosterhuis?
Yes, Mr. Zucman, thank you very much for being here. And I really share your analysis on the risks about equality in public finance and democracy. More ideally, a wealth tax on the super rich. I think the best way should be to do that in an internationally coordinated way. But international cooperation is under pressure. Has been more effective in the past than nowadays. What are the most important steps that can be taken by individual countries like the Netherlands now?
Mr. Zucman?
Thank you very much. And this is indeed an absolutely crucial question. So I want to emphasize that I'm of course a big believer in international cooperation, and this all started from this work at the G20 to try to create a common standard at the global level. But that being said, we don't need an international agreement for this to work. Any individual country on its own could successfully implement such a tax. And in my view, it's in fact how we will eventually reach, and I'm going to explain for us in a second why, but it's how we will eventually reach an international agreement. It's by individual countries doing it, like some of them created the income tax a century ago, and then it became the thing to do, the new standard. Or like some countries in the 1950s, like France, created a VAT, and then it became the thing to do, the new standard, and it became global. But why can any individual country act effectively? It's because the main risk always with the taxation of the very rich is the threat of tax exile, of out-migration. We do it alone, okay, the rich are going to move to a low-tax country, and so it will be like shooting ourselves in the foot. But what's really important to understand is that this problem is not a kind of law of nature. It's a problem that has a solution. Any country, individually, could say something like, okay, if you've become very rich in the Netherlands, and now you move to another country like Switzerland, fine, you're free to do so, freedom of movement, but we will keep taxing you after you've left for a number of years, perhaps 5, 10, 15 years, as if you were still a tax resident of the Netherlands. Let me emphasize that the US goes beyond that. The US has citizenship-based taxation, meaning if you are a US citizen, for instance, you were born in the US, you have to pay taxes in the US until you die, right? Even if you only spend 2 months of your life in the US. That's pretty extreme. But what other countries do is the opposite extreme, where you've lived all your life in the Netherlands, you became a billionaire there, and now you move to Switzerland, then immediately, starting January 1st of next year, we stop taxing you. What I'm saying is that there's an in-between, there's a whole range of policies in between, and the right system is a middle ground where taxes would follow you, perhaps not until you die, like in the US case, but for 10 or 15 years. And you don't need an international agreement to do that. Any country alone can do it, and any country is well justified to do it. For the very simple reason that if you became very rich in the Netherlands, that's in large part because you benefited from education, from healthcare, from public infrastructure, from the law courts that protected your property, and not mentioning the knowledge accumulated over centuries by all of humanity. And so you don't have a right, once you've become super rich, to kind of move to another planet with no duty whatsoever to the rest of the world. You have to pay taxes somewhere. If your new country doesn't tax you, that's their choice, that's fine. But then your origin country, where you built your wealth, should collect the difference, should make you pay. And so that one concern, which is a genuine concern that we need to take very seriously, tax exile, out-migration by the wealthy, also have very logical, clear, and practical answers.
You would like to ask a follow-up question?
A short question on this. Thanks for this possibility to have something like an exit tax or something. But especially the super rich, they live in one country, but they also have assets in a lot of countries. So how can just one country have a taxation on all those assets?
Mr. Zucman.
Absolutely, and a very important concern. Indeed, it was a huge problem historically for the past wealth taxes, because in the past, it was really easy for wealthy individuals to hide assets in countries with very strict bank secrecy rules. And there was a lot of financial opacity, and studies showed that there was a lot of wealth concealment of this kind. But what's really important is that things have changed since 2018, because since 2018 there's an automatic exchange of bank information between financial institutions in all the world's offshore financial centers and the tax authorities of more than 100 countries, including the Netherlands. And so now, I'm not saying it's impossible, but it has become much harder for people to hide assets. And the way a tax like that would work is that people will have to pay this minimum of 2% of their wealth on their global assets. So moving assets to another country doesn't change your tax liability. And it was easy in the past by moving assets to evade taxation, but that has really become much harder today. Which, by the way, let me mention that this is also this automatic exchange of bank information that makes it possible today to enforce the type of trailing tax that I was describing earlier. You know, the idea that we are going to keep taxing you after you've left. I think the reason why no country has done it so far is that there was this feeling that, we are just not going to be able to track the income and the wealth of our ex-residents. But now that there is this automatic exchange of bank information, this becomes actually enforceable.
Mr. Hogeveen.
Thank you so much, Chair, and thank you so much, Professor Zucman, for being here. It's always interesting to have these kinds of discussions. I would like to follow up on the question my colleague asked on And also about the specific numbers that you have stated in the French political debate concerning your proposal. Because you said it would raise about $20 billion, euro per year. But according to, I read an article from Le Monde, and they said it would only be approximately 5 billion, especially if you consider avoidances, mobility responses, and asset valuation into account. So, what's your credible downsize revenue scenario if these are taken into consideration, or do you have a response on that? Thank you.
Professor Zucman?
Absolutely, yes. This is a very important question, and I both agree and disagree with this evaluation that was made by a team of economists saying, oh no, we cannot expect 20 billion, we can only expect 5 billion in revenue from that. First of all, why do I agree? I agree because the computation that they make is they say, okay, well, if we recreate something like the French wealth tax that was abolished in 2017, with its loopholes, without any kind of anti-exile rules, with all its possibilities for tax avoidance, then the studies, the academic studies, and I've contributed my share to that body of work, teach us that we can only expect a quarter of the theoretical amount of revenue, because the super rich are going to structure their wealth to exploit loopholes. Some of them are going to move, and that's true. And that's indeed the French wealth tax collected about 5 billion euros, and so I have no problem with that. If we recreate the past, the wealth taxes of the past, if we repeat the mistakes of the past, it's not going to collect more than in the past. That's fair. But where I disagree is that, of course, what I propose is not to do that. What I propose is informed by this historical experience and is to do something radically different. In many ways, the opposite of past wealth taxes. So past wealth taxes, they started relatively low, in fact very low, like box 3, in the wealth distribution. But they had all sorts of loopholes and exemptions. And when you create loopholes and exemptions, invariably the super rich end up exploiting them because they are well advised by lawyers and accountants. And so the conclusion is that what these past wealth taxes did is that they taxed the merely rich, the affluent, but not the super rich. The effective tax rate on billionaires in France, the wealth tax rate, was 0.005%. Essentially, they were legally exempted from the tax. And here what I propose is to do kind of the opposite of that, is to start much higher in the wealth distribution. Let's say 100 million. It's never been done anywhere in the world. But in exchange for this much higher exemption threshold, no loopholes. It's obvious that if you have more than 100 million, you have a high ability to pay tax, and so you don't need any exemption, any deduction. And so this type of tax would effectively only tax the super rich, but it would tax them well. And given how much wealth there is at the top, it would generate much more revenue, about 20 billion in the French case, than old-style, flawed wealth taxes.
You want to ask a follow-up question? I have another question, but it's on a different topic. Yeah, then, well, let's do a second round of questions, and then I will give all the members that are present the ability to ask a question. I'm looking to Ms. Abdi. Yes? Okay. Please go ahead.
Yes, I would also like to thank you for your visit today and for your very important book. I also read it with a lot of interest. I was curious about your analysis of the public debate in France when it was introduced this tax, because there was a lot of pushback. I was wondering if you could say something about some of the arguments that have been put forward, including about the attractiveness of the climate of France for businesses and wealth. So I was hoping you can say a bit more about that.
Professor Zucman.
Thank you very much. And the debate in France was really interesting. So first of all, there was overwhelming popular support for this measure. So opinion polls showed 86% of the population in favor, an overwhelming majority across all political stripes, left-wing, right-wing, center. in fact, there's no proposal in the economic or social sphere that polls higher than that. So that's one thing. Second is a lot of the arguments that have been made, I think are arguments that people have been used to making when debating, the old wealth tax, and that really I don't think apply in that particular case. Like the risk of wealthy moving abroad. Yes, okay, if you let them move, if you don't have any backstop, they will, right? But here the idea is to discourage that by creating a neutrality between living in Paris, living in Zurich, living in Bermuda, same tax bill, right? So that has not been done in the past, but that's a new proposal, and I think it's important for people to engage with that. So the idea is to create this 2% minimum floor, but combined with this backstop, where the taxes are going to follow you after you move for, let's say, 10 years. There was a concern sometimes about the tax hurting companies, business investment. I don't think there's a logical argument here, because it's not a tax on corporations, you're not taxing profits, not taxing investment. You're taxing wealthy individuals, not companies, who personally own more than 100 million, let's say. Okay, so that's not going to change, to affect the incentives to invest in the country. Like foreign investors are not going to be affected by that. The choice to open a subsidiary in France or in the Netherlands, it's not going to be affected by such a tax. So it's neutral with respect to investment decisions, with respect to location choice decisions of corporations. So I think that's important. The main lesson that I drew from the French debate is most people agree. I think we'll get there. The fact that it was voted by the French National Assembly, which is not a left-wing dominated parliament, not at all, I think was a very strong signal that this is becoming a reality. And of course, the taxpayers involved, by and large, don't like it, and that's okay, right? It's understandable from their perspective, and in some sense, it's a good sign, right? If they didn't feel very strongly about the tax, probably it would mean that it's not going to be effective, that there would be easy ways to avoid it. And so a lot of the debate was about the fact that they didn't like it, but we're talking about 2%, right? So a lot of the debate got very heated because, some people said, it's like a radical idea, it's communism, but communism is not 2%, it's just not that.
Thanks. A follow-up question? Or no? Mr. Sultin?
Thank you so much. In our party program, we also propose like a wealth tax or like 1 or 2%. But you actually add something saying, if you can show that you've already paid taxes on a different way, then you don't have to pay that wealth tax anymore. Can you explain why you add this to your proposal? Because I think it makes it also a bit more complex, but maybe you did it because it's legally more feasible. Can you explain why you add this component?
Professor Zucman?
Thank you very much for flagging this, because indeed this is very important. So what I propose is not an extra tax that adds up to what you've already paid, like standard wealth taxes. It's a minimum tax, meaning it's only if you have more than 100 million euros in wealth and you pay less than 2% of your wealth in income tax that you would have to pay this extra tax to reach the minimum of 2%. So it's the most targeted and fairest measure that you can think of, right? It's not only on the super rich, but on those among the super rich who avoid taxation today. Someone who would already pay a decent amount of tax would not be affected. That's really important, because then there's no concern about double taxation. By construction, there cannot be any double taxation. And the reason why I've made this proposal is, remember, I wanted to address one specific problem, which was this anomaly where the super rich pay less tax than the rest of the population. So the goal was not to say, okay, let's make the tax system progressive, let's make the rich pay more. It was just to make it impossible, if you're extremely wealthy, to pay less than working class, middle class individuals. And so if you already pay normally decent amounts, that's good. You're not affected. So in that sense, it's more moderate than a regular wealth tax.
Mrs. van Dijk?
Thank you. My first question, I asked why the Netherlands would be able to play the lead role. My second question is, what are, in your view, potential negative consequences for our economy if we do that? There's also a backlash.
Professor Zucman?
I think that, frankly, with 2%, people can deduct whatever they've already paid on a tiny fraction of the population, if it's done right. And the most important thing is to have this anti-exile trading tax. That's the crucial thing. But if you do it like that, it is not going to have any measurable negative effect on the economy. The net effect would be positive. I'm going to explain why. But first of all, why no negative effect? Well, because, look who's affected. We are talking about very small number of taxpayers whose wealth has been growing at a rate of about 10% on average per year over the last 4 decades. So now you're saying, okay, so what this tax would do is that instead of growing 10%, their wealth would grow 8% a year. So it would still rise very fast, right? So it doesn't really change the incentives for those individuals to do whatever they're doing, to work, to innovate, to create businesses. They would still get very much wealthier each and every year. So no negative effect to fear on that front. But then why would the net effect be positive? Well, it's of course because the money would be used, presumably by government, for useful things. And in the European context, and I think there's a need for investment in education, in particular in higher education, in research, in infrastructure, in healthcare, in all those public goods and services that have historically been the key engine of economic growth in Europe. And so if the money is used that way, I think the net effect on innovation, on productivity, on attractiveness for a country like the Netherlands would be positive.
Yes, Mr. Bushoff?
Yeah, an often heard counter-argument against national taxation is the risk of out-migration or capital flight. You already mentioned that. And to overcome this, you mentioned that you could rely on a citizen-based taxation like in the US. And I was wondering if that's also part of the French proposal or not, and if not, why not? And would you recommend the Netherlands to impose such, citizen-based taxation? Is that even possible?
Professor Zucman?
Absolutely. So to be very clear, the proposal is not to mimic the US. It's not to do citizenship-based taxation like the US, which has problems of its own. Is to do something different. Is to do something that's not based on citizenship, but based on 3 criteria. Number 1, have you lived for a long time in the Netherlands? Have you been a long-term resident of the Netherlands? And citizenship should not matter. You've lived for a long time in the Netherlands, number 1. And number 2, you've become very rich in the Netherlands. We can debate what it means, but the point is not to burden everybody. It's very focused on the very rich. And number 3, now you decide to move to a low-tax country, a country that taxes you less than the Netherlands. Then, if those 3 conditions are met, the Dutch taxes would keep applying after you've left, not until you die like in the US system, but just for a number of years, 5, 10, 15 years. So it's much less extreme than the US system. The US system, citizenship-based taxation, affects all US citizens, no matter their income, no matter their wealth, no matter how long they've spent in the US, no matter where they move, So it's a big bureaucracy, and in the vast majority of the cases, the US Treasury doesn't collect any additional revenue. Here, the logic is very different. The logic is just, there has to be a backstop. It shouldn't be as easy as just moving to a tax haven. Avoiding taxes shouldn't be as easy as that. If you've become very rich, you have duties to the rest of society, right? You cannot just pretend that you don't owe anything to anyone. You have to keep paying taxes somewhere. And if it's not your new country that makes you pay, it has to be the country where you became very rich in the first place.
Follow-up, small follow-up.
Yes, so thank you for this answer. And is this also, are these three criteria you mentioned also part of the French proposal, which is now stuck in the Senate? And yeah, that's it.
Yeah, apologies, I forgot to answer about that. Yes. So in the bill that was passed by the National Assembly in February of 2025, it was part of the bill. It was a breakthrough, frankly. I think it's the most important idea behind all of that is we are not powerless as individual nations to fight this risk of outmigration. So that was passed, right? And it will come back. It's blocked by the Senate, but the income tax in France was passed by the French National Assembly in 1909, was blocked by the Senate until 1914, and then it happened, right? So patience.
Mr. Oosthuis.
Thank you, Mr. Chairman. We talked a lot about the importance of this taxation and the economical impact. And it seems quite obvious to introduce this kind of tax. But my question is about the more political side. Why don't we have this tax yet? 2 years ago, you made the proposals to the G20. Could you tell us a bit more on how the discussion went on the G20 summit and afterwards?
Professor Zucman.
Yeah, absolutely. So, first of all, it's a new idea. It was first developed, indeed, in the context of the 2024 G20, when Brazil had the presidency of the G20. So it was barely 2 years ago. I wrote and submitted my report to the G20 presidency in June of 2024, which is essentially the first time that this idea is fleshed out. So 18 months ago. And ideas take time, especially in a context where we're all used to talking about what we know, the past wealth taxes, and here it's something different. So what was the reaction at the G20? Some countries were very in favor and said, okay, look, we've made progress with the minimum tax on multinationals or better taxing digital companies, and so we need to now open a new chapter, and this should be about that. That was what Brazil said, that was what France said, among others. There were many countries said, okay, look, we're not used to discussing that. In fact, it was the first time that issues of tax progressivity or inequality were discussed at the G20. So by and large, the main reaction was, let's study it. And it has been under study in ministries of finance ever since then. Then the situation at the G20 changed. Donald Trump was reelected in the US, and so now it's not like there's a lot that's happening at the G20. But you have a coalition of countries that have joined forces to say we need to advance that discussion. And a coalition of the willing, so to speak. And so that includes Brazil, that includes Spain, that includes Colombia, South Africa, and other countries I think are going to join pretty soon. And so the discussion is going on. But I want to emphasize that if you look at all the major changes in taxation historically, those changes don't happen through an international agreement. They happen through one country, one small group of countries, just doing things differently. And they create an income tax, and then all countries create an income tax. And that, I think something like that is going to happen again. And I don't know if it's going to be California, which is going to be the first state to do it, whether it's going to be France, whether it's going to be the UK, the Netherlands. It could be any number of countries. But I think it's likely that in 20, 30 years, when historians look back at today, they will come to see 2025, 2026 as the beginning of a turning point, of an international movement to fix the taxation of the ultra-wealthy. And the reason why things have started to change is because the facts have started to appear very clearly. And, from the facts, the proposal, the logical solution to the problem that we've become aware of. So that's, my prediction, so to speak.
Yeah. Sovin.
Thank you so much. My question is a bit historical. It is often said that we today live in times of unprecedented wealth concentration. But that is not, it has happened before. I mean, if we look at the late 19th century, we saw the Rockefellers and the Vanderbilts, and they had large amounts of wealth concentration. They built the railroads, they built industrial infrastructure. And back then there was also a discussion on these were robbers and they needed to be taxed more heavily. So my question to you is, if you compare it to today, where we also have these wealth concentration also behind the drive behind AI, for example, but also that their assets are much more intertwined and digitally relocated all around the world. What can we learn from history for today's perspective, and what could drive a solution?
Professor Zoek.
Absolutely, and I think this parallel that you draw with what is known as the Gilded Age in the US is really quite fascinating, in the sense that by some metrics, the US is already way past the peak of the Gilded Age today in terms of wealth concentration. So in 1913, at the peak of the Gilded Age, the super rich of the time, the top 0.00001% owned, like the Rockefeller and Carnegie's and the likes, owned in wealth the equivalent of 4% of US national income. And today, if you do the same computation for the US today, it's 12% of US national income. So we're talking about 19 households who, if they spend their wealth, they could buy about 12% of the value of all the goods and services produced in a given year in the US, 3 times as much as at the peak of the Gilded Age. So we're in a situation which is, from that perspective, which is unprecedented. And despite that, we can try to draw lessons from the past. And so it was largely in reaction to the huge concentration of wealth in the US that the income tax was born. The US changed its own constitution in 1913 to introduce a federal income tax. And then that the income tax became sharply progressive, right? Because in response to that, the US at the beginning of the 20th century very much was very concerned about kind of the oligarchic drift, of the country. Like many Americans today are concerned about the same oligarchic drift. And for a very long time, the US, that was certainly true at the beginning of the 20th century, thought of itself in reaction against European countries, which were viewed at the time as excessively unequal from the time of the American Revolution to the beginning of the 20th century. And so the US then went pretty far in using the tax system, and in particular the income tax, to try to regulate inequality. Because, basically between the 1930s and 1980s, the US had top marginal income tax rates of in between 70 and 95%, and went very close to having a legal maximum income at some point. There's a very famous speech by Franklin Roosevelt in Congress in 1942, where he says, look, I think that no American should have an income after paying taxes of more than $25,000 of the time, the equivalent of about $2 million today. And hence, I propose to create a 100% tax on all income above $25,000. And Congress voted on 92, 94%, very close to 100%. So that was the main way, the main tool that the US used at that point in time to try to regulate inequality, and it had pretty dramatic effects on income and wealth concentration that declined enormously. But the challenges today are somewhat different. One big difference is that today wealth materializes much faster than income. If you think about those AI companies, they can have valuations in the billions or tens of billions way before they start turning any profit. And that's why the system of income taxation, a big innovation, progress of the 20th century, is not really adapted to today's challenges. We need to find something else, and that's why having some backstop that's based on wealth is, I think, well adapted to the reality of extreme wealth today, which exists independently of any income. Sometimes people say, well, that's unfair to tax, to have something based on wealth if there's no income, because then it means that you're just taxing paper gains, that wealth is virtual. But I emphasize that extreme wealth is always real. It's never virtual. Extreme wealth is always an extreme power that you might choose to use or not. But it's always a power to influence policymaking, to influence elections, to influence the prevailing ideology by buying media, by buying newspapers, to influence markets by buying competitors. And that's why fundamentally, even if there's no income, there's a good case for having this principle that if you're extremely wealthy, even if you don't have income, even if you're innovating a great deal, you are in AI, whatever your individual circumstances, they should not be relevant. You have to pay a minimum each and every year. That's really the core of the logic of the proposal.
Well, thank you very much, Professor Zucman. I think we've already spent almost an hour listening to your excellent introduction, but also your very thoughtful answers to great questions from the members of Parliament. So I think it's a good moment to end this meeting, to wish you a lot of luck with your colleagues in further research and advocating possibly a great idea. So I say possibly because I have to be neutral as a chair. Okay. Well, I end this meeting. Thank you all for coming. I close the session.